Severe supply constraints and a shift away from public transport during the pandemic has resulted in an insane car price bubble that's now about to crash. Car dealers are watching prices drop like a rock in face of rapidly changing market conditions, soaring interest rates, and auto production finally picking up speed. On the other hand, many buyers that purchased their vehicles at inflated prices are now underwater on their loans, which is creating a crisis that is worrying even Elon Musk and other big names in the industry due to its size and scope, with experts warning that financial turmoil is ahead. That's what we're going to expose in today's video. But before moving on, we kindly ask you to support our work with a thumbs up, and don't forget to subscribe. Vehicle prices, especially of used cars, are about to come crashing down after almost 2.5 years of record highs as new supply starts to make its way into the market. From 2020 to 2022, wholesale prices for used cars, adjusted for seasonality, mileage, and age, shot up roughly 88%. In January, the average used car sold for $27,156, a 1.5% decrease from the prior month, according to Kelley Blue Book. New car prices, meanwhile, are still historically high, but the rate of price growth is also slowing down. The average transaction price hit a record $49,507 in December, falling down to $47,681 in January, according to car pricing site Edmunds. Since June 2020, used car prices have spiked due to the combination of easy credit provided to consumers at very attractive interest rates and constrained production of cars due to semiconductor shortages. Millions of drivers had no alternative other than taking exorbitant loans on cars. Given that new car inventory was at historic lows, consumers have seen the average used car costing more than a new one. In other words, the used car bubble is even bigger than the new car bubble. While the average interest paid over the life of a new car loan reached a record $8,436, the average interest paid over the life of a used car loan reached an all-time high of $10,204. But now that interest rates are rising, the supply of semiconductors is increasing, and Americans curbing discretionary spending, used car prices are in a freefall, plummeting 8.8% in the past month alone and marking the highest monthly decline since June 2009, when General Motors and Chrysler were both in bankruptcy proceedings and the economy was hemorrhaging 500,000 jobs a month. It was a completely wild ride, said Ivan Drury, Director of Insights at Edmunds.com Inc., about the rapid surge in the cost of used vehicles. Some cars have already dropped in value by as much as 30% since the peak of the bubble, and despite some in-demand vehicles that are still commanding higher than retail prices, industry analysts say the value of second-hand cars is on its way back to pre-pandemic levels. Consequently, falling used car prices mean that the vast majority of consumers who took in the past 2 years are now underwater, so they owe more to the banks on these cars than these cars are actually worth. All of these factors are likely to spark another automobile crisis that will have disastrous consequences. For instance, if today a buyer that's underwater on their loan and purchased their vehicle at the top of the bubble wants to trade it in, dealers would ask them to spend thousands of dollars to cover the difference between the loan and the car value. But the consumer doesn't have that money on hand. This is the perfect storm. The dealer can't sell the car, the consumer can't buy a car, and the lender can't finance a car, wrote financial analyst Adam Ayer. For their part, lenders that are now seeing consumers struggle with this situation are starting to waive the open auto stipulation clause. Simply put, they're accepting lending on a new car purchase, knowing the consumer has an open auto loan with a different bank. Oh yeah, that's incredibly risky because this consumer is very likely to default on the first loan. But this is the only way lenders can finance cars and dealers can put cars on the road. Hence why we see a wave of repossessions hitting the used car market in 2023, Aya added. We are of the view that the upcoming wave of repossessions will most likely be similar to the auto loan downturn in the 1920s or early 2010s, the analyst highlights. In the 1920s, when the auto industry was still shaping up to become the market that we know today, car manufacturers and dealers offered easy credit to consumers, which resulted in a surge in car sales. However, after the market crashed, many borrowers found themselves unable to make their loan payments, leading to decreasing car sales and economic depression. In the 1990s, another car loan bubble emerged, fueled by low interest rates and lax lending standards that provoked a boom in car loan originations. But most of these loans were subprime, meaning they were issued to borrowers with poor credit. So, when interest rates began to rise and the economy slowed, subprime borrowers defaulted on their loans, causing a decline in the value of their loans and a downturn in the auto industry. As Aya explains, the most recent car loan bubble occurred in late 2000s and early 2010s in the wake of the global financial crisis. With the economy still slumping, auto manufacturers and dealers once again offered easy credit to consumers. But this bubble was different from the others, in that it was driven more by demand for new cars than by easy credit. The current bubble is unique in its formation, but still has elements of the previous ones. For Craig Moore from Craig Moore Wholesale Cars, who's been in the auto industry for more than 30 years, the latest drop in prices means that the car price bubble has definitely burst. He said good cars and in-demand cars that are in short supply are still holding strong, but run-of-the-mill cars are either back to pre-COVID prices or on their way back to pre-COVID prices, and it's happening very quickly, he said, during an interview with Drive.com. He added that there was always going to be a reckoning because used car prices could not simply continue to climb. As the bubble started to deflate, finance companies wouldn't approve certain loans and insurance companies wouldn't insure certain used cars because in reality, when the dust settles, they'll be worth less than what someone was asking for them and what some buyers were prepared to pay, he continued. Moore revealed that during the pandemic, he could barely source 1 or 2 cars a month to sell. Now, I'm getting a dozen calls a week from people wanting to sell their cars, and I get to take my pick of the best of them. Another car valuer and wholesaler, a 34-year veteran of the auto industry, exposed that used car prices have fallen by about 15% in the past 3 months. With the exception of hard-to-get in-demand near-new cars with long waiting times, such as the Toyota Land Cruiser 70 Series, Ford Ranger Raptor, and Suzuki Jimny. The second used car expert, who asked to remain anonymous, told the outlet that most used car dealers are offering low prices for trade-ins because they need to make up for the losses they're now experiencing, having paid too much for trade-ins over the past 2 years. A lot of used car dealers are now upside down, so the car is worth less than what they paid for it, he said. When you're offered a trade-in, you aim low because you need to be able to make sure you're not going to go backward, the expert continued, highlighting that nobody really knows where the bottom of this bubble really is. That's why trade-in offers have started to come down dramatically. I'm looking at my used car lot right now, and I'll have to sell about half of those cars at a loss because the market has turned. I need to get rid of them, he emphasized. Every day those cars sit there, they're costing me money. The wholesaler admitted that the past 2 years have been the most turbulent and unpredictable time of his career. None of us know what's around the corner when it comes to prices, he told Drive. The market has never been so hard to predict. A third source interviewed by Drive said, at the height of the pandemic, when things were crazy, we were making up to $5,000 profit per used car on average. Now, we're back down to less than $2,000 profit per car, or making a loss of up to $5,000 to get it off the books. A fourth industry expert, a dealer principal of a network of multi-franchise showrooms, outlined that used car prices are settling, but they still have a way to fall. What we've seen evaporate almost overnight is people paying $5,000 or $10,000 over retail to jump the queue to get into a near-new car. People have been conditioned to wait, he stressed. Moody's Analytics and JP Morgan seem to agree with their forecasts. In a new statement, researchers at Moody's pointed to additional downward pressure on used car prices coming from weaker domestic demand, as the combination of rising borrowing costs and elevated inflation erodes the ability of households and businesses to make big-ticket purchases. Meanwhile, JP Morgan says that used car prices are set to fall another 20 to 25% in 2023, and new car prices could drop by 5 to 10% in the coming months. At the same time, we still have an alarming number of Americans with auto loans scrambling to make monthly payments. Auto loan performance saw further deterioration over the past 30 days, and loan delinquencies have also jumped. Of all loans, severely delinquent ones have reached the highest rate since the financial crisis about 15 years ago. New bone-chilling data released by Cox Automotive sheds light on the rapidly deteriorating auto loan market. The report said loans delinquent by more than 2 months increased by 5.3% and jumped 26.7% from a year ago. Loan delinquencies and defaults are sending shockwaves through financial markets. In its latest earnings call, Wells Fargo reported a higher loss ratio from auto loans compared to a month ago. Ally Financial, the biggest car lender in America, saw charge-offs quadruple in the third quarter, which pushed its stock down by roughly 50% year-to-date. Capital One, which historically finances a lot of people lower on the credit spectrum, is taking a beating too, with its stock losing almost 30% of its value. Many other car lenders that made a bunch of bad loans with used car values artificially high in 2022 will see their shares going down and start reporting negative earnings and face a probable dilution if they take heavy enough losses. This situation is raising concerns of some big names in the industry in the past few weeks. On Twitter, Elon Musk, Tesla CEO, and famous investor Cathie Wood agree that disaster is coming. They're both warning about the ripple effects of this potentially explosive situation. ARK Invest has been concerned about the impact of declining residual values on the $1 trillion plus auto loan market, Woods commented. Potentially the biggest financial crisis ever, Tesla's CEO added. Conditions are deteriorating alarmingly fast, so if you have an extra car you don't particularly need, now is a good time to sell it while prices are high and falling. But if you're looking to buy a car, you should probably wait a little longer. With used car prices falling around 2% per month, the value of anything you buy right now is gonna melt like an ice cube in the sun. And the last thing you want is to be caught up in this colossal mess. What do you think about all this? We look forward to reading your comments under this video, and thank you for watching.